and welcome to Edison TV. My name is Victoria Chernik. I'm an investment director at Edison Group, and my guest today is Craig Martin, the chairman of Dynam Capital, the investment manager for Vietnam Holding, an investment trust listed on the main market of London Stock Exchange. Craig, welcome.
Thank you very much.
Well, you run Vietnamese, one of the three Vietnamese funds listed on the London Stock Exchange. And perhaps not everybody knows that while the whole world is slowing down, the Vietnamese economy is actually growing pretty healthily. And the IMF has recently upped the forecast for this year. GDP kind of grows from 6 in the summer to 7 just as recently as October. Can you tell us what's going on?
Well, it's actually the fastest economic growth in decades in Vietnam, and that's saying something, because over the last 30 years, on average, Vietnam's grown its economy measured by GDP by about 6.5% per annum. So IMF and everyone else is looking at maybe 7, some even hinting at 8, which, given what's going on in the world, is remarkable. But you know, it's a fast growth in its economy. It's also been fueled historically, you know, over the last 30 odd years by high levels of foreign direct investment. This is manufacturers kind of global manufacturers setting up in Vietnam because of relatively, you know, low labor cost, great strategic location. It's not China, so a number of people have been moving from China to Vietnam. And again, that foreign direct investment has been a key driver over the last 30 odd years. And this year, it's at the highest levels, at record levels of foreign direct investment. So that's been a key drive for the economy. Also, the export story this year, up to now, has been very strong. Vietnam's got many trade relations it's established over many years, globally, bilaterally, as well as multilaterally. And so its export to the US and other markets has been growing. And that's been a great boost to the economy. And not to forget the domestic market. The domestic economy, 100 million people consuming, retail growth has been high. It's bounced back from COVID. Retail growth levels are actually higher than they were pre-pandemic or pre-COVID. So that's all the positive stuff. But we have to look through that the lens of the fact where, you know, Vietnam is a key part of the world supply chain, and we've seen the currency depreciate by about 6% against the US dollar so far this year. Now, that's nothing when you look at sterling, which is down 20, or the yen, which is down 20%, those emerging market currencies. But for Vietnam, on average, for the last 25 years or so, it's been about 2.5% depreciation. So, you know, US dollar is so strong, nothing that Vietnam's done, but it has depreciated against the US dollar. So it's been a mixed year. The economy's been strong, good signs, but you know, everyone's cautious about what's going to happen in the future, you know, with the global economy that we're in. Okay,
yes, good. So given that, and you mentioned the domestic investors, many of them came into the financial markets in the past couple of years, and they're new to that. So let's talk about the financial markets and how they're taking this year's downturn in performance. That must be taking some by surprise. And broadly speaking, why is the market going down? Is it like they are afraid and the market is depressed? What about, you mentioned as well, international flows into the economy? Do international investors come into the market this year, and what's the situation been?
Well, look, it would be nice, wouldn't it, if the capital markets kept in lockstep with the macro economy. Sometimes it doesn't, and that's certainly the case in Vietnam. The capital markets are quite young in Vietnam. They're 20 years old, and as you say, what we've called the rise of the retail investor in Vietnam has been phenomenal. In the last 18 months, more domestic investors have opened stock accounts or brokerage accounts than in the last 18 years. And today, the market, 90% of the market flows are these retail investors. So they're a significant force, and foreign investors have largely been, pushed to the sidelines of that, so to speak. And these domestic investors are somewhat shorter term in their investment horizon. We studied them for the last year, and we've seen that, unlike us as a foreign institutional investor, we've got a time frame of 3 to 5 years. Domestic investors, 3 months at best, 3 to 5 weeks probably in likelihood. So there's certainly different mood, and the fear of what's going on globally, plus the fear of some recent arrests in Vietnam and worries about what that means, have really driven a downward trend in the stock market, which is down 30% this year. It was up 50% last year. Our fund performed on the upside, our funds performed on the downside, but it's still down. And that's because of the domestic market fears and uncertainties more than the economy of Vietnam per se. So those domestic investors have taken fright. They've sold off largely indiscriminately over several months now. And then particularly it's been made worse over the last several weeks. There have been a few high-profile arrests. And again, this is a consequence of the capital markets are young, equity markets are still young, bond markets are actually a lot smaller than the equity markets in Vietnam. And the regulations are quite new, and the regulations haven't caught up to the activity in the market. So this year, the government has taken some fairly firm action and has arrested a few people. It fired the head of the stock exchange back in May. And last Saturday, it arrested a local tycoon, a chairwoman of a very large property group with links into a private unlisted bank. And that's spooked domestic investors around that. So it couldn't come at a worse time in terms of what's going on in the global environment and global mood about equities and the outlook generally. But if we unpick that, as we said at the beginning, that the kind of macro in Vietnam is strong. Inflation is not an issue in Vietnam in the same way it is in the UK or the US. It's got a strong domestic economy, well positioned for international markets. But the domestic capital markets have been really driven by the domestic investors, and they've been driven by animal fears around what they're seeing in the short term. So it's not an impact in terms of the long-term trajectory of Vietnam. In fact, it means the stocks are getting cheap. So we're seeing stocks at record levels of affordability. Banks, 1 to 1.2 times price to book. It's about a standard deviation away from where they are normally. And many other companies trading at single-digit PEs on a forward basis. So when you look at the macroeconomy and the growth and earnings, it's an attractive calculus. It's an attractive market to be looking at if you can look through the near-term fears and uncertainties.
So you reckon that the regulations, sort of turbulence within the regulations and firing of people and other corporate restructurings, do you think the worst is over, or shall we expect something else to come like next year? Just a couple of words on that, and then we'll switch to the VNH.
There's a saying in Asia that if you find a cockroach, there's more than one. So I think, if you look back actually over the last year, there have been a few heads that have been chopped off, tall poppies that have grown, or in Asia we call them tall bamboos that have grown. But particularly the government is concerned, it wants growth, but not at any cost. So in May, the Vietnamese Prime Minister was in New York, and he rang the closing bell at the New York Stock Exchange. It was the Communist Party extolling the virtues of the capitalist system and saying we want good American investors into Vietnam. That was the same week he fired the head of the stock exchange. Very similar period of time to banning a bad actor in the stock market. And then just last week, they've arrested this actor who they claim was up to no good in the bond market. And as I say, the bond market is nascent, but it needs to develop. And for long-term project finance or projects, for infrastructure, and for the growth of the capital markets more broadly defined, having a healthy bond market is important. So the authorities, want to nip these issues in the bud. The consequence of that is uncertainty. The consequence of that is, when will the regulations come into place? The drafts come through, they might not be so clear. They wait for kind of implementing regulations and circulars. So that takes time. So there's, I don't think we've seen the end of kind of arrests and people under suspicion, because where there's one cockroach, as I say, there tend to be others. So it's part of this journey as the capital markets expand and grow, and it's been tremendous growth. When the fund was listed on the London Stock Exchange, when Vietnam Holding was listed, the market cap of the whole country was $2 billion. It's now $300 billion. The bond market today is a fraction of that, but you can imagine in a few years' time, if it's given the room to grow, it will be significant as well. So we just have to kind of be patient, be selective, not be too fearful when everyone else is fearful, and find good companies with great long-term prospects.
I see. Well, thank you for that. One can see the prospects, growth prospects are there. And given all the risks and uncertainties that you've just highlighted, and also that the stocks are at attractive valuations, you mentioned as well, how do you position VNH for 2023 and beyond?
Yeah, so the portfolio has actually got a reasonable level of cash at the moment. Normally, the fund would have maybe 2 to 3% of cash. It's about 10% now. So, we are looking to where we can add selectively into names we know at good valuations. We're currently underweight the banking sector, but we do see there's been a broad sell-off of banks, the good as well as the bad. And so, we will selectively look to add back into some of the good banks that we like at these attractive prices. We're underweight real estate, and we're probably going to remain so, watching the sector, because there are some headwinds. There's also attempts to regularize the rules around real estate in Vietnam. And so that, you need to see where some of these things will land. We've been overweight technology, FPT, our #1 position for many years now. It's growing at 30% per annum in revenue and profit. Its average return on equity over the last 5 years is 35%. So it's a tremendous compounder, and we like those kind of stocks. We're also overweight currently on the domestic consumer, and we're going to continue to unearth new gems in that sector. Retail growth, as I say, has been high. It's higher than it was pre-COVID. So it's not just from the low base of last year's lockdown. And those key retailers in our portfolio, they've also compounded their earnings at 25, 30% per annum, some over a decade. So it kind of reflects the structural growth and change in the consumer landscape in Vietnam. So, we're looking for rising stars to complement our what we call category champions in that space. So we think the domestic market, domestic players could perform more strongly, maybe than some of the export-related sectors, particularly, if the world's going into a little bit of a nervous period, and maybe demand in sub-segments comes off next year. So, we're happy with where we are in the portfolio. And for us, for Vietnam Holding, we're a very nimble player. We can take advantage of changes and opportunities. We're nimble across the size of company, from the small to the large. And we like to find these compounders, these businesses that will really earn good returns on equity over a long period of time. And we're very focused. All we do is look at equities in Vietnam, and we're very active at the portfolio level. And then for Vietnam Holding, with the board, are very active in managing the discount between the fund's net asset value and the share price. So, more of the same around what we do. We're also very pleased that we continue our ESG journey, and we've just been awarded top marks from the United Nations Principles for Responsible Investing. They do a transparency report. And we've also got a portfolio that has a much lower carbon footprint than the index. So more of the same around that. We'll do more, measure more, report more, but we'll also be nimble around the opportunity set as we go through what's been a very volatile 22 and into the challenges that 23 is going to throw at the world.
Indeed, Craig. So the economy is strong. There are lots of uncertainties and risks and headwinds for the financial markets. And the team is on the outlook for the opportunities and hunt for value in this environment. Well, thank you. For that.
That's right.
Yes, thank you for that, Craig. So our guest today is Craig Martin, the chairman of Dynam Capital, the investment manager of Vietnam Holding. We'll hope to see you again very soon, Craig.
I look forward to it. Thank you, Victoria.